Today we have with us Manish Dhawan. He's a money manager at Mystic Wealth from last 11 years. He's a commerce graduate and he did PGDM diploma in sales and marketing. He was working in corporate previously, so he also is he. I mean, he is into blogging and did various podcasts with various great moment investors of all time. So you'll be thoroughly enjoying this session. So initially we'll be asking a few questions from my end. Then the forum will be open for your questions. You can send in your request and we'll be taking your questions one by one. So with this, I request Manish. Manish, how it all started for you? So our audience would love to hear from you. Mute, I guess.
Yeah, Prince. Hi. Uh, Thanks for the kind introduction. How it all started? Well, I basically got full time into the industry in the year 2011. Prior to that, I was working in the quality assurance departments of various multinational companies. My actually introduction to stock market was nothing more than a coincidence where in the year 2007, I was asked by my mom to square off my dad's portfolio. My dad had an untimely demise, and so I was given this job to square off this position. And when I did that, it was nothing much, just a million rupees or something. But I asked myself this question as to on what basis or what premise am I going to square this off? Is this the right time to sell it or not? Uh, that one question led to basically Pandora box opened up, and I started reading on the subject. And one thing led to another. I realized that I'm liking it, and so much so that I was devouring book after another, and fascinating relationship started with stock markets. Initially, I was basically reading Warren Buffett and Charlie Munger. And through that, I got introduced to Joel Greenblatt, and I started implementing what he was teaching on spin offs and demergers in the Indian markets. And from there on, it just carried on. And later, while my partner Daya continued with the demergers in the spin off world, I moved to more and more towards the quant side of it, where I got introduced to the concept of momentum, and I started backtesting that thing in India, and I realized that the edge holds true here. And then from there on, Mystic Wealth has basically been doing both the things, value and momentum. My partner Dayanand Deshpande handles the value part, and I take care of the momentum. So that's in a nutshell how we started, and it's been what uh, 10 years now, 11 years now.
Great. So you are a proponent of finding market inefficiencies to create alpha. So would you like to speak on that?
Yes, and Prince, this is not something that has happened overnight. When I look back historically, I can safely say that I have made majority of my money when I was doing stuff systematically, be it value or momentum, both. I have net burnt money in my discretionary escapades. Uh, Not much. At best, it must be breaking even. But if you include the cost and transaction and the stress and whatever, it's barely breaking even, and in fact, must be losing money. So the underlying current was definitely the fact that the majority of the money has been made when we left the human discretion out. Even in my value investing endeavors, while Daya has a lot of discretion, even then the checklist almost ensures that it's practically systematic for all practical reasons. Within the spin-offs and demerger domains, there are set of things that we followed back then, which helped us find those multi-baggers. So yes, to answer your question in short, the writing was pretty much on the wall by looking at our own Excel sheets that we are making money primarily by sticking to what works, which is called factor investing, and remaining within the realms of that factor. And discretionaries where the human emotions take over and you only burn hands. I mean, 1 in 100 probably do well. Yeah.
So, Manish, would you like to simplify momentum investing for our viewers? So, I mean, not everyone is aware what exactly it is all about. So, that would be great if you explain in a layman's language for them.
Yes, sure, Prince. So, in a nutshell, momentum investing is basically saying जो ऊपर चढ़ रहा है वो चढ़ता रहेगा. So for translation, I'm not sure if our audience can understand Hindi. What goes up continues going up is the underlying tenet on which momentum investing works. Sure, there is a concept of mean reversion that kicks in, but the beauty is, or the entire point is that the mean reversion kicks in a lot later. The time frames are different. On a shorter time frame, what goes up continues to go up enough for us to capture it and get out before the mean reversion kicks in. Now, extensive backtesting has been done on this subject in US. There are 100-year backtests available, and we have done podcasts with the who's who in the momentum world in stoic podcasting to bring home the same point that this anomaly has been there and is here to stay. Now, uh, uh, Eugene Fama, who is considered the father of efficient market hypothesis, also conceded that the anomaly is definitely there, and there is no other explanation to it. There is alpha. Otherwise, the efficient market hypothesis is supposedly foolproof, but there's this one factor that is something that's going up. If you invest there, you beat daylights out of index. So that in a nutshell what momentum investing is. And so there are various ways to define momentum now, but essentially all ways culminate into the point that you're chasing what's going up and you're playing to the understanding that it will continue to go up. I mean, surely you will have like any other trend following system, your win rate would be a lot lesser here. However, the winners more than compensate for the losers because the ones that really break out big really catapult to stratosphere, pulling your portfolio along.
Right, Manish. So, Manish, like you talked about mechanical and discretionary things. So, would you also like to elaborate that and how emotions and biases play a role in this?
Yeah, books and books have been written on this, Prince. So I don't want to repeat the whole thing again. But since you've asked this question, and it's a very pertinent question, I'll just tell you that. So there are people like Mark Minervini who will follow the same momentum set of rules, but with their discretion. And what discretion essentially does is that it also gives you an amazing power to uh, uh, do aggressive position sizing, and so you can generate some serious alpha as well. They also mix fundamentals and uh, earning surprises along with momentum to generate alpha. Problem with the whole thing is, and actually it's not a problem per se, but it's a fact of life, is that for every one successful Mark Minervini, there will be at least 1,000, and I'm not exaggerating, it may be 10,000 people who would basically make a mockery of the whole thing. Because when you concentrated and when you're using discretion, you are exposing yourself to your own personality. And then your results are a sum total of who you are as a person, and not just that, the things you're going through as a person during that part of your life. let's say you're going through a bad health or bad relationship, it will start reflecting in your P&L, and there are more chances that you will blow up. And so the ideal solution, at least for me, I figured out, is that to compound my money consistently, systematically, rather than relying on my personality, which can be volatile at times, where I would probably hit triple digits one year and go belly up the next. Yeah, I hope I answered your question.
Right, Manish. Manish, I saw one of your video in which you extensively talked about position sizing. So, would you like to touch upon that, and obviously the services which you offer at Mystic Wealth? So, our audience would be, I mean, we appreciate if you tell them that if they'll be interested, they can get in touch also. Yeah.
Yeah, Prince. So, position sizing is a big topic in itself. So, it's outside the scope of this particular talk that we are having. I would urge the audience to probably Google position sizing Mystic Wealth on YouTube, and you'll come across this 1 hour webinar that we did. Uh, and in essence, what we are trying to tell there is that position sizing is the holy grail, if there is any, in stock markets. It's not the strategy. Of course, the strategy has to have an edge and it has to be profitable to start with. But once that caveat is taken care of, the real difference between men and the boys is the position sizing. How you size for optimal return, and also within the position sizing framework is power of uncorrelated strategies, where where you run 3 or 4 strategies together, and how beautifully the overall drawdown comes down and the equity curve becomes a lot more smoother. We have covered this topic in our presentations as well on YouTube videos. It's amazing how when we club, let's say, Mystic Wealth Value, Mystic Wealth Momentum, and Gold, all three together, and all three have their individual drawdowns, but because all three are positive edge strategies in itself, when you combine these three, it's just magically how it happens. It's a holy grail almost, that the equity curve becomes smoother. And why it is important to have a smoother equity curve rather than a elevated one is that it gives you the holding power. Uh, Without which the gyrations will kill you and you'll get out at the worst possible time. Yeah.
Right, Manish. So, Manish, yesterday, a few of our from Twitter family has asked few questions, so I'll be asking those. And in the meantime, the audiences can send their speaker request. They can ask their questions, and I see Prashant and Deepak in the audiences. So, Manish, appreciate if you ask them to join in. So that would be more interactive. Yeah. So, question is like, Manish, one question is, how do you screen stocks? Do you use any indicators? If yes, then which one has worked best for you?
So there are various ways you can screen stocks for your momentum portfolio. We at Mystic Wealth don't use any indicators per se. The price action itself is an indicator. So, uh, but I won't rule out that doing that is a bad thing. There are people who use RSI or ADX, and which is well and fine. The idea is to find stocks which are doing much better than the others. The idea is to rank everyone. And so we at Mystic Wealth basically rank these stocks. We a lot of factors go into it: their volatility, their overall rank over the previous few months, and their distance from the highs is also a factor. There are many ways to skim the cat. So there are some people who will look for all-time highs. There's some people who can look for 52-week highs. There's some people who would basically rank them on the basis of how fast they have run over the period of last 6 months, 12 months, 9 months. Some people would do a weighted average of their movement of the last 6, 9, 12 months, so on and so forth. And then you can adjust them for their daily move, so that you're only handpicking the ones, you're penalizing the ones which are popping up suddenly, and you are selecting the ones which are growing consistently. Yeah.
Right. So you talked about 52-week high, all-time high. So there is one question on this also. So in this strategy, what are the ways to reduce risk in this?
I'm sorry, I didn't get the question. What are the ways you reduce the risk
Yeah.
on it? Drawdown is part of, if I understood the question correctly, the drawdown is part of life as far as momentum investing is concerned. So there is no holy grail. It's not that you will come up with something and automatically, magically, the drawdowns will simply vanish. If anything, the fear is that if you've come up with something like that, more often than not, you have curve fitted the data too much, and what has worked in the past will not work in the future. So drawdown is part and parcel of momentum investing. Whenever there is less momentum or no momentum, or when the market is range bound, you're bound to suffer in a momentum strategy. So in the back test, 2011 was a horrible year, and because market went nowhere. Similarly, in the live performance, 2018-19 was pretty dismal.
Right, Manish. So another question is factors to be considered before selling a position.
Uh, okay, so because we at Mystic Wealth practice everything systematically, so the factors are predefined. So actually, this question makes more sense for a discretionary portfolio where you selling into strength or using price action to make your exits. For a mechanical system, selling is as defined as an entry, so there is no emotion involved. Either you will be getting out when the stock has lost its rank. If you, let's say, if you've ranked the stocks on top 20 and you've put a exit criteria as कि अगर ये top 35 से भी नीचे चला गया या top 40 या top 50, whatever your backtest suggests, then I will get out. And so there is no answer to your question. It's as mechanical as it can get. Other, if it goes below that rank, you're out. Then there are some people who do it with a trailing stop loss, whatever trend following trail that they're following. If it breaches that, then they're out. There is no ambiguity. Uh, there's no answer to this particular question. What factors go into the selling? So if the selling decision, your pre-coded selling decision has triggered, you're just getting out.
Right, Manish. So we have Deepak and Prashant with us. For sure, they'll be having great questions to grill Manish and get the best out of him. So Deepak and Prashant, over to you. And in between, I'll ask another questions also. So Deepak, yeah.
Okay, hi Manish. Manish, there is a one simple question. Let's say your portfolio is of 20 stocks, and let's say two have exited, and based on the criteria of stock selection, so let's say first two stocks will be in, and then I think it is a factor of luck that the other selected stocks don't do equally well, or more than the stocks that were selected as entries. So does it? If we take this as a criteria, let's say the top two you selected didn't do well. I hope they don't do like this. But let's say the two you selected by your system didn't do well, but the rest that were left, but were satisfying the criteria, they did extremely well, or a set of those stocks did extremely well. So will this be, can this be back tested in the historic performance, or a factor of luck comes into play around this?
Yeah, Deepak, that's an awesome question, and we've had this discussion in our Slack channel on this topic many a times. You can never take away the factor of luck out of the momentum investing. Like it's such a potent point that you made. Like I'll give you a live example. Mystic Wealth. momentum missed Goa Carbon long because when the buy signal came, our 20 quota was full and there was no exit. And so we basically missed a 8 or a 9 bagger. Did that affect our result in the overall scheme of things? The answer is no. So this is the beauty of it. You more than compensate for it with the other things that you are long on, because once the bull run is on, the other momentum stocks will be doing fairly well as well. But to answer your question in one word, luck definitely plays a role. There are outliers you can miss. Now, when we do back test, we do what is called as Monte Carlo simulations. So you basically see 1,000 equity curves of parallel universes, what all could have happened. So if the overall scheme of things fine, you continue with the strategy, but of course you can never take out luck completely out of the equation. Yeah, I hope I've answered your question.
Yes, thanks.
Prashant, over to you.
I mean, we interact so much that I don't know what to ask Manish kind of thing. But Manish, I mean, I think I have asked this question, I think, on the Slack as well, elsewhere as well. There are what, around 30 to 40 advisors who offer momentum, if not more, on the small case itself. But we see only one PMS offering a pure price-based momentum. Why do you think it is? Is it because of a function of liquidity kind of thing? Because we have a high turnover kind of, or what's stopping people from? I mean, PMSs are now growing left, right, center kind of thing, and yet we don't have PMSs coming up with momentum as a strategy network. I mean, we now have mutual funds, but not PMSs. What do you think is the reasoning?
Yeah, very valid question. And again, we've had this discussion on our Slack channel so many times. So my answer is as good as yours, Prashant. I'm not able to put a finger on it as to what is the reason. Maybe liquidity can be one of the reasons, but Abhi, off late, I was just going through the PMS Bazaar list and I realized that hardly any PMS is beating their benchmarks. And so, if there is any need of the hour for having a momentum PMS, it's now. There are a couple of them. Let me correct you, not one. I think Anish Teli also runs a momentum portfolio. So there are just two in town. Yeah.
Thanks, Manish. Prashant actually forgets me most of the time, so it's okay.
Hey, sorry, Anish, sorry. I mean, basically, I see yours as more of a, what do you say, a factor momentum, a factor investing rather than pure momentum itself. Because I believe you look at, I mean, more of a, I mean, I keep confusing you for a multi-factor kind of thing because that's what you talk about more often rather than pure momentum like me or Manish kind of thing. Sorry about it.
No worries. I was just pulling a leg, yeah. So basically, see, I think it's a more of a, it's the way we explain it, because see, you or Capital Mind or everybody uses momentum. Nobody uses momentum, just price momentum. Everybody uses momentum divided by volatility. We are also doing the same thing. We use momentum and low volatility, but we say that upfront. We say that both momentum and volatility are part of our investing process, whereas everybody else just says momentum. So I think that's where the confusion lies.
So, Manish, in between, I ask a quick question from one of our audiences. The question is like, instead of having an active strategy, what could be the downsides for the Nifty 200 Momentum 30 Index?
Yeah, that's a good question. We actually recently wrote a blog on the subject. So I am of the opinion that Nifty Momentum 200 is a very good index, and anybody would do well investing in that index compared to Nifty. Of course, the caveat is that it basically excels on both sides. So वो गिरता भी उतनी speed से ही है. So its drawdown is little bigger than Nifty, but it outperforms Nifty hands down. If you calculate it as absolute return or rolling return basis, 3-year rolling, 5-year rolling, whichever way you cut it, the momentum index beats Nifty hands down. So it's definitely something that retail should invest in. Having said that, the volatility is little higher, and there is no downside protection. So once it goes down, it basically gives away everything. And so because and it's they're not to be blamed per se, because their rebalance timing is such that it is so delayed that by the time their rebalance comes, the whole world would have changed. So that is, but despite all the drawbacks, it beats Nifty hands down.
Great, great. Yeah, Manish. So, Amit, you can unmute and ask your question.
Hi. Actually, I don't have any question precise, but I have something to share if I am allowed to speak up there.
Sure.
Well, so I have a very small and little experience about the momentum investing, something like so. There are two segments basically where anyone can invest. One is a derivative segment, and one is a non-derivative segment, but a liquidate phase. So if anyone really wants to go for momentum investing and wants to just sit relax with that, so personal, I feel like if you choose anything which is not directly indicated with linked with like so much short build-ups and aggressive trader, aggressive activities over there like a derivative segment, then you can feel a safe and a sharp up edge where the things which become out of the scene, out of the theme, वहां पे एक चांस रहता है कि बिकॉज चीजें लोगों के थोड़ा सा दिमाग से बाहर निकल जाती हैं, आउट ऑफ द थॉट प्रोसेस होती हैं, टॉक ऑफ द टाउन नहीं होता है, वहां पे ग्रोथ अच्छी रहती है, कंसिस्टेंट रहती है. नॉन डेरिवेटिव का बेस्ट पार्ट इज कि वहां पे बहुत ज्यादा हेयर एंड देयर नहीं हो सकता. वहां पे अगर किसी को शॉर्ट करना है तो दे हैव टू सेल ओनली द, मतलब उन्हें अपना पोर्टफोलियो सेल आउट करना पड़ेगा. इंट्राडे पोजीशन है तो शाम को कवर करनी पड़ेगी. बट डेरिवेटिव सेगमेंट में दे कैन डू एनीथिंग. मतलब उनका कहीं पे लॉन्ग होगा, कहीं से वो शॉर्ट मार सकते हैं अपने आप को किसी भी तरीके से ना. दे कैन डू द हैंग ऑन्स. तो अगर इन्वेस्टिंग करनी है, टर्म बिकॉज इन्वेस्टिंग वर्ड इज हियर, इट्स नॉट अ मोमेंटम ट्रेडिंग, इज अ मोमेंटम इन्वेस्टिंग. सो पर्सनली आई वुड सजेस्ट कि अगर किसी को लिक्विड काउंटर्स ठीक ठाक अगर दिखते हैं एंड दे आर जस्ट नॉन डेरिवेटिव सेगमेंट में अगर हैं, so we can just find a very good momentum over there. The good example is Tata LXI when it was in derivative, रोज इसमें अच्छे खासे मूव्स आते रहते थे बोथ डायरेक्शंस. जब से ये बाहर निकला है, टचवुड खैर इसके लिए फंडामेंटल्स भी अच्छे ग्रो कर गए. लेकिन आप देखो ना, बहुत सारे काउंटर्स हैं लाइक दे आर नॉट इन डेरिवेटिव सेगमेंट, इतने टॉक ऑफ द टाउन होते भी नहीं है, बट दे आर गेनिंग गुड, they are producing a good wealth for the investor point of view. So it is my small observation about the non derivative segment participation, basically for the momentum investing. Thank you so much.
Thank you, Amit. So, Manish, another question is from Ankit Hinduza, right? He's asking how to start building systematic mechanical momentum system for someone having no prior knowledge of coding or software.
Yeah, so the first thing that I would suggest you to do is to join Prashant Krish's Slack channel. You will see a repository of information there, and that will shorten your learning curve for sure. We have done this blog post for money control. Just Google Mystic Wealth Money Control, and that article basically talks about in detail the answer to this precise question: how to start from scratch, and what all books to read, what all research papers to read, and how to get your feet wet on in coding. So something as basic as a ranking thing can be done on Excel and Google Sheets. But if you want to backtest, then you would probably need some knowledge of Python or Amy Broker. Yeah.
Okay, Manish. So, Manish, can we also talk about risk management? So, that is a very burning topic basically. So risk is one thing we should be very sure. And the analogy which you talked about, idiot and morons are perpetual idiots. So would really love to hear on that front also, if you like to.
Yeah, this presentation that we did, Prince, was more so for bringing home the point amongst the discretionary traders, which is that, and this particular analogy is copy pasted from a market wizard. This is not my brain or my origination. So I just simply copy pasted this from Mark from Australia. He basically segregated people between idiot and moron. And the difference was that the morons are perpetual idiots. So they repeat the same mistake again and again. And so the underlying point that Mark was trying to make was that it's okay to make a new mistake all the time, new mistake every time. But it is unpardonable sin to repeat the same mistake again, because then you're not learning anything and you're a moron. And so he went on and he says that the way to make sure that you're not repeating the same mistake again is to collate data. You need to have data points as to what you're doing. So majority of discretionary traders are not really keeping a tab on what exactly do they do in an entire day, and it's pretty random and almost amounts to gambling. If you want to be systematic, you need to know what you're doing and you need to document everything. And so risk management, the first step towards risk management comes from documenting what you're doing so that you actually know if you have a system to start with or not. Like I said, Prince, it's outside the scope of this talk to talk about risk management. जैसे कि मैंने आपको बताया, this can last for hours, right? And it's a topic in itself. So,
Yeah,
you would do well to go through.
right. So one question is from Shashank. So he's asking, if the drawdowns are large, why don't we have a product on the short side for derivative stocks in downward momentum?
Yeah, that's a good question. We are constrained by a small case where there is no shorting possible, so it's a long only products that we can offer. And secondly, even outside small case, uh, at least at Mystic Wealth, we did not find many takers for a long short portfolio. The retail's not really keen on that. I mean, maybe our sample size is small, but that's what we figured. And apart from that, there are taxation issues as well, where your short side profits will be taxed at 33 whatever percent. Yeah.
Right. So one question is from the researcher Anirudh. Sir, please ask about Nifty Alpha 50 Index.
I would request if Prashant's still here to answer this question. This will basically open up a Pandora box. Nifty Alpha 50 Index is not index that mutual funds are finding easy to replicate. So over to you, Prashant.
So, I mean, look, the attraction of Nifty Alpha 50 is the returns. I mean, basically, it has had one of the best returns in the last couple of years. But, I mean, when you have extraordinary returns, you have to ask, what has it done to gain that extraordinary returns? So, if you dig into the portfolio of Nifty Alpha 50, go back in time kind of thing. I mean, it's tough because you don't, I mean, NSE doesn't provide much of data in terms of historical changes and everything. But there is data. I mean, if you search for it, you will get that. Point is that, for example, it had, Tandla, very, very questionable stocks, Adani Green, with very high weightages. It's not like weightages of 3% or 5%. We are talking about 10, 12, 15%. So when you have high weightage of stocks that are, basically our BCG, which Kotak got tripped up because they could not enter BCG when they had to enter. The stock was frozen in upper circuit. These are, in theory, I can construct it's like backtesting, something that is looks good on paper kind of thing, but is just not executable. If you are, and not even, forget execution. Even how do I mean, can you really allocate a substantial capital to a stock? I mean, a portfolio that has that kind of stocks? I don't know. I mean, where stocks go up for 5% one day and fall down 5% next day, kind of thing. Where it's on in circuits, kind of thing. So Nifty Alpha 50 looks good. I mean, I think one of the issues with Nifty Alpha 50 is that the stocks don't have stocks have circuits. I mean, if you don't have circuits, then it will be a different ballgame altogether, kind of thing. Then it's at least executable. Even then, I think it's very questionable about the data itself. I spoke with a fund manager who says that their team tried to recreate the Nifty Alpha 50 of the past. I mean, NSE just gives you a pure backtest numbers kind of thing from inception. And they could not come up with, no matter what changes they did, could not come up with the same performance as the NSE's performance. So I don't know whether how good the performance is. Only now we have the live performance, and we really know whether the next few years will tell us. But my own thought process is it will burn. I mean, anyone investing will not really get the alpha he is looking for. I mean, it may still give Nifty, I would say, both Nifty 200 momentum and Nifty Alpha 50 will be more of Nifty plus. Something more than Nifty on a long term, but not really as exciting as what you would see on a historical chart kind of thing.
Okay, thank you, sir.
So, any follow-up question, Anirudh, or you got your answer?
So just one question. You told that execution is difficult, and if we compare on a historical basis, Nifty Alpha 50 has given better returns than Nifty. So the problems you have mentioned, can those be solved by वो क्या solve हो सकते हैं भविष्य में? In future, it can be solved by any SEBI intervention or any changes in the index.
Yeah, why not? भविष्य में कुछ भी हो सकता है दोस्त. But अभी for now, at least as far as I'm concerned, I don't think this is replicable. I consider myself a daredevil. I take crazy risks. Even I don't mind taking Adani exposure, even 3-4 Adanis in my portfolio. But even with that, I find Nifty Alpha 50 a little too wild to handle. Because it can basically go long 12-13% on a totally illiquid counter. Yeah.
Thank you, sir. Thank you.
Friends, if you want, I can add.
Yeah, Nish, go ahead, please.
Yeah. So basically, after the Kotak fiasco with Nifty Alpha 50, the NSE, or rather the Nifty Indices company, has launched 2 other indexes. One is called the Nifty 200 Alpha 30, and the other one is the Nifty 100 Alpha 30. The difference between, I think, one is the momentum calculation is different. In the Nifty 200, the difference is in the weightage again, and the rebalance period is quarterly. So now let's see, so they basically learned from that, and now they've restricted themselves to a liquid universe. Now let's see if they get the products on that and if there is an alpha.
Sir, if the indexes you mentioned are newly launched?
Yes, they are newly launched. So you can go to the niftyindices.com website and you can look for these indices. Their fact sheet and their backtested data, everything is available.
So can you repeat the name, sir?
One is Nifty 200 Alpha 30 and the other one is Nifty 100 Alpha 30.
Thank you, sir. Thank you, sir.
Welcome.
Yeah, but as we speak, there are no mutual fund products for retail to invest in it.
Yes, sir. Only Nifty Alpha 50 is replicated by one of the mutual fund. Also, can I add one more question, sir, if possible?
We just learned from that fiasco, and I think after that fiasco, these 2 indexes were launched. So these are recent launches. So maybe a product is on its way, but not yet as many.
Okay.
Sir, can I ask one more question?
Yeah, please go ahead.
Sir, as we see in US markets, there are leveraged 3x indexes, right? So also in our Nifty indices, there is also a 3x index. So what's the logic of that 3x, if you can explain? And it's okay if you don't want to answer this question, then also it's okay.
Yeah, logic is simple that it is one more option for people to hedge their portfolios. So if you have a it's easier for you to create a long short portfolio once you have inverse ETFs in your kitty. That's the only logic. I mean, I'm sure as our market develops, I don't know when over a period of years, we will have the same products as well.
Thank you, sir. Thank you.
Thanks, Anirudh. So Manish, for like from last what we say 11 years, you have been managing public money, and prior to that, you were more into like learning and all. So, what are your big learnings and big mistakes in last 11, 15 years?
Yeah, I think I already shared this, Prince. I will reiterate it. The my learning has been that majority of my money, I mean, in fact, all my money has been made in the systematic domain. And even if I look around, and I will like to pass this judgment on not just me but everyone I know, barring a handful of exceptions, are the people who have made money have been able to do that only by following some form of a system. Anybody who has ventured into the world of stock markets via discretion has not a positive story to tell. And so my urge is to the audience to curb your overconfidence and enthusiasm and admit to the fact that it's a system that will make you money and not your human mind, your discretion. Yeah.
All right, great. So, Manish, one book you already talked about, You Can Be a Stock Market Genius by Joel Greenbelt. Any other book recommendation which our audiences could benefit from? Yeah.
Once again, Prince, I will request the audience to Google our article on money control, where I have extensively detailed all the momentum research papers and the books that they should be reading.
Right, Manish. So, audiences, last 5 minutes, if you have any questions or so we can happily take your speaker requests. Manish, we are done with almost all the questions which have been asked by the speakers, and I have tagged the tweet with the video which is on position sizing. So our audiences can check that tweet and they can listen to that. That is very informative and a different perspective. So Manish, before we wrap up, I would request you to tell our audiences. I mean, obviously you have talked about, but again, what you they can gain out of Mystic Wealth and offerings. You can, if you would like to talk about, yeah.
Sure, Prince. Although this was a question answer session, so I would not like to use it as a branding mechanism. But just to end it, Mystic Wealth basically has a couple of momentum offerings. One is Mystic Wealth Momentum, which is a 20 stock automated portfolio with a rebalance done every week. And the second is MMG, which is Mystic Momo Gold, which is a 70-30 asset allocation between momentum and gold, with 30 stocks in momentum rebalanced on a monthly basis. You can find both of them on our small case microsite.
All right, thanks. We got Mahan as a speaker. Mahan, you can unmute and ask your question.
Yeah, hello. So I've seen a few small cases on momentum. Like all of them have a limit of investing, like up to 40 lakhs or 20 lakhs. And I've seen a picture posted by Prashant a while ago about slippages. It was like a horror movie. So I'm really confused if really investing in a small case is worth it, because that picture really is haunting me. So what do you have to say about that, Manish?
Yeah, so it depends on the stocks that your algorithm is picking. If your algorithm is strict enough on liquidity factors, the slippages are a lot lesser. I won't say they will go away, but they're a lot lesser than the horrifying picture as shown by Prashant. But yeah, the fact of life is that because small case at least hits market orders, if you are managing or putting in, let's say, 30-40 lakhs, there will be stocks where you will end up paying a pretty hefty slippage. So that is the reason there is this cap that you see on small cases, that if you are putting in your AUM is, let's say, 40 lakhs, there can be names like in past Mystic Wealth have had names like GMM Fodler and couple of others where the slippages must have hurt.
Okay, thank you.
Just to interject, I mean, basically, look, I mean, just because you invest, I mean, buy a small case doesn't mean that you have to execute through the small case itself. I mean, people, the only advantage of small case is that it lumps all the orders together and sends it. Basically, rather than, I mean, it doesn't ask you to send in each individual order. It basically lumps everything and sends it a single go, which is why it actually is. I mean, people love it because it makes it seem very easy. All you need is to do a single click and done. But if you are really wanting to, what do you say, invest a significant sum of money and through I mean, have an advisor who offers only for a small case, for example, my own suggestion is to take the small case, but don't execute through the small case. You can execute, I mean, your small case will have a different, what is a number for you, but finally, as long as you know what you're doing, I mean, you can control your slippage. You don't have to go out and press a market order. You can go out and do a limit order yourself. But I mean, that's a manual approach, which will actually, more messy kind of thing maybe. But my own thought process is above a few lakh of rupees, once you're in a couple of millions kind of thing, it's really worthwhile. You will really save a bunch of, more money than you would have spent on the small case subscription itself. I mean, there's no compulsion that you have to actually execute through the small case itself, even though it offers a very easy way to execute.
Yeah, so this is a very valid point. The family and friends that we have who are invested with the Mystic Wealth Momentum use this particular technique only. Let's say anything above 80 lakh odd that they've invested, they are buying in tranches rather than buy. They're just using small case as a medium to get the rebalance updates, and they are doing it manually only.
So they place limit orders in tranches. Is that what you're saying?
Yeah.
Okay. But what if the price doesn't come to the limit order?
Yeah, good point, my friend. But remember, we are not really a intraday strategy. This is a weekly time frame system. You will get ample time to get filled.
Yeah, definitely. Okay, thank you.
Yep. So Manish, it was a really interesting session. Any closing remarks for the day?
No, nothing from my side, Prince. Thank you for doing this, and I would like to thank the audience for taking out time on Saturday. It was fun.
Yeah, great. Prashant, would also love to hear any closing remarks from your end also. And also, I have an open request for you also. Would also like to learn from your experience sometime. So over to you.
No, I mean, this. I told Manish that I wanted this to be more of a session than, I mean, more of a general discussion, because we have had general discussions a lot of times on momentum. Look, the moment, I mean, unlike value, where you have a guru in terms of Warren Buffett or Charlie Munger kind of thing, we don't have any big names that we can show off and say, boss, look at that guy, he has done it via momentum. And momentum has its issues. It's not like, I mean, if you are a value investor, for example, you'll be, I mean, invested for, I mean, people talk about investing for multi-years kind of thing. I mean, in my own case, for my holding period is approximately, say, 4 months. So it's not easy to, I mean, if someone were to give me 1,000 crores, I don't think I can generate the returns I am generating currently on my personal portfolio. So it has its limitations kind of thing, but it has its advantages as well. I mean, as a small investor, for me, what I care about is my returns, not about whether I mean, I'm with I mean, I don't care what others think about the strategy I am. As long as I think that the strategy is valid, which is I mean, it is not just in the local sense. I mean, not just, I mean, it's not like only me or Manish are talking about momentum. You look around, you have, I mean, multiple momentum funds in US, listed funds that have long track records kind of thing. You have, I mean, 70 plus papers on SSR and purely on momentum investing. I mean, there's enough academic evidence to show that momentum has a value. Now, as a small investor, for my own thought process is that, I mean, one should explore it and not dismiss it as a kind of a game or a gambling. I mean, someone actually mentioned that pharma sector, I mean, momentum investor jumped on the pharma in 2021 and then they have not got burned kind of thing because they did not have a, I mean, they did not know what to do kind of thing. But most of us, me, Manish, we all have made money in pharma kind of thing when the market, I mean, when the trend was up. And when the trend started to decline, we got out. I mean, as simple as that. So I think there's value to having momentum. Me, Manish are all full time. I mean, basically, we are all mostly 100% into momentum. So we are maybe biased in that sense. But I still think there is a very high value. And I mean, it requires work. It's not like, I mean, there's no freebie as Manish explained. It's not like you'll get free alpha without, I mean, there are trade offs. You have to accept those trade offs kind of thing. It takes time. But I think it deserves a place in most portfolios in any way. I mean, in my opinion. Thank you.
Thanks, Prashant. So, guys, it was purely an educational association, and any names in between taken were purely for illustration. So, kindly take that with a pinch of salt. And again, if you want to gain more knowledge on the subject of momentum investing, you can check handles of Prashant, Manish, and others who are, and even the space is recorded, so all the questions which were taken today you can revisit, so that will be available at our handles. So with this, I thank Manish for sparing time on weekend for us and sharing his insights. It was really nice to have you, and even we met a few months ago in Delhi, so it was very interactive on your part as well. And the Bangalore situation is really bad, otherwise Saurabh would have joined today's session. So yeah, thank you, Manish.